Alistair Schultz joins us from ACY Securities in Sydney. Alistair, great to talk to you this morning.
Good morning. Thanks for having me again.
Yeah, great to have you. Look, where do we start? Because there is so much happening. Obviously, we're looking forward to the Reserve Bank and its decisions. What are you expecting? Is that in line with expectations across the board?
I think there's a lot to really look at when it comes to the RBA. I mean, this week, I suppose, for a lot of analysts could be considered to almost be like hell week. You've got an election, you've got raising coronavirus, you've got 3 different central banks posting out results, all talking about monetary policy. You've then got jobs for the US by the end of the week. So it is getting a bit crazy. And then add in earnings season sort of numbers as well. Everyone's going to be a little bit panicky about what might be happening. When it comes to the RBA result that we're expecting today, there has been a lot of talk. Obviously, you've just mentioned it before about where we might be dropping from 0.25 basis points down to the 0.11 sort of scenario. Now, whilst that, does usually you would anticipate that being a really big thing. We're getting next to 0% on our interest rates, but in reality of the situation, it's not going to make that much difference. It's not game changing for the RBA. Now, if you were to actually just focus on that for just a moment and think about the average homeowner here in Australia who might have a $300,000 mortgage, then it really equates to about $250 saved per annum. So it's not huge, and it's certainly not something that's going to be changing the way that we see monetary policy for the RBA. Now, the bits that I do think we will see a little bit of a macroeconomic impact, and this is highly, speculative and whether or not we're going to see that action, but there has been a little bit of talk about the interest rate on exchange settlements changing from a 0.1 down to a 0.05 or even a 0.01% rate. And this would be the one that actually impacts how we see Australia sort of recovering a little bit. It means that the banks might be a little bit more liberal with their cash than what they have been in the past. And it means that there's more interest for them to actually be giving that cash out rather than keeping it in the RBA long-term savings box, if you will. Of course, the other one that we're looking at is obviously on the 3-year yields and, of course, the 5 and 10 years, and if they are going to actually expand that quantitative easing through those as well. If they do it through the 5 and 10-year yields, then we are going to see some pretty interesting numbers. I imagine we would see the Aussie dollar come down. The real question is that we ask, if they do decide to target 5 and 10-year yields, is how much is it going to be for? How long is it going to be? And how much are they going to do each month? Is this going to be something that runs into 2021? Is this something that runs, as a one-off, simple sort of singular payment, or how is it going to work in that way? And that's really a part of the advice we're going to be sort of looking to see that comes out from the RBA later today.
Yeah, I mean, do you think it will be an open-ended sort of program, or do you think the market would prefer to see a specific sort of number put on it?
Look, every analyst always likes to see a specific number for exactly the reason that we can really forecast where it's going to go, and we get a little bit more idea on where we might put our targets. But chances are, being the RBA, they are a little bit sheepish when it comes to giving exact figures and timelines. So I imagine that they will probably put something in words of the line of in the near term or in the medium term, or over the next period or wherever it may be. They won't give us an exact date. When it comes to the monetary side, they probably will give us a figure, but how much and how often they actually start using that is the question. At this point in time, I'm estimating, and what we've seen from other estimates is probably about 100 billion, but that could be very well a variable that we have to consider for the next, sort of 12 hours or so, if not less, just to see where they really sit on that. And if it becomes a case of, they might put 25 billion a quarter, or if anything along those sort of lines, is really where it's going to be sitting as the questions that come up later today.
Alistair, just wanted to pick you up on that first point you made there about the average Australian mortgage. It's not really going to affect how much people are saving. However, do you think a cut would further encourage other people to take out loans? I guess you can play this 2 ways in terms of the psychology of it. People may think, well, hang on, the economy's in trouble if they need to cut, so I won't spend. Or it will in fact encourage people to take out a larger mortgage, or in fact take out their first mortgage.
Look, it's going into one of those areas where it's really dependent on the psychology of the consumer on the ground and how they feel about the current situation. Obviously, if you've got easier access to money, then more people are likely going to try and get that access, and that's more important when it comes to that, the interest rate on settlements. But of course, if we're talking about the general rate, then a lot of people also be thinking about the idea that if we've got a really low interest rates, now might be a better time to buy because you can get locked in with something lower for a little bit longer. as opposed to perhaps when we start seeing rates come back up again, which for me is going to be quite some time down the track. It's not anywhere nearby soon. So I think it's a double-edged sword. One side, you have to sort of, the consumer is going to be considering from a psychological perspective, okay, if we've got to cut the rates, then we are likely going to be seeing, more turmoil, or that the economy is expecting to have worse sort of conditions. But then on the other side, you might find some sophisticated investors sort of thinking, well, this means that it's going to be easier money access, which might help increase some of that consumer spending.
Alistair, I don't think I can let you go without asking you about the US election and the impact it may have. Look, there's so many ways this could play out. We know how the polls are looking. I guess in the next sort of 24 to 48 hours, how are you expecting markets to track?
Look, I think there's going to be a bit of, it's an interesting one when it comes to the election. I think in my lifetime, this is certainly the most controversial election I've ever seen. It could potentially be one of all time. But in regards to where we're seeing polls going, I mean, you only take one look at 2016 and see what the exit polls were like, at the hours leading up to the announcement of Trump's success. In this instance, we're seeing sort of similar results. So to me, I don't like to pay attention to the polls too much. Yes, you can sort of get a little bit of a gauge on where it might be going, but it really is a 50-50 no matter which way it goes, because those exit polls won't give us accurate data. You might get the occasional Trump supporter who doesn't want to admit he's a Trump supporter, or vice versa, the other side for Biden as well. So that does make it a little bit difficult to really get accurate results that are measurable and able to sort of give us a heads up in advance. The few states that I think that are important to watch are going to be Florida, Pennsylvania, and probably Michigan. And there's about 4 or 5 of them there that are incredibly important, because one side will be looking at who gets control of the Senate, and the other one will be who might potentially become the president. Now, if you're looking at Pennsylvania, that's really going to be looking at more in terms of who might become the president, because they're the swing states, they're the important ones. When we look at some of the other ones like Florida as well, that's another side of it. But if we start dealing with sort of North Carolina, then you are looking at seeing a senator sort of get voted out potentially, and then getting a Democrat replace it, which really matters for that blue wave perspective. If we don't get either a full red or a full blue wave going across the whole thing, it means that the stimulus idea in the fourth quarter is going to become much more difficult for the US economy to really get to. As we've already seen, even just in the last couple of weeks, whether we've seen the White House going up against Democrats and the House Speaker, Nancy Pelosi, trying to actually get a deal across the table. It's just not getting there for them. And for whatever reason, they keep changing where their goalposts are sort of aligning on that front, whether it be about how much or where the money's actually going, seems to be the 2 biggest points of contention. Now, if we see the election occur and we do get that blue wave scenario, then it means it's, or the red wave scenario, it means it's a little bit easier for them to actually get the stimulus that either party actually wants. If we don't, then we could be looking at a very long period of time before we actually see some more stimulus that the US economy seems to need to keep that recovery effort going further forward.
Alistair, strap yourself in over the next couple of days. Great to hear from you. Thanks for joining us from ACY.
No problem. Thank you very much for having me.